Hello everyone, welcome to today's US Open live webinar. It is Thursday, May the 23rd, 10 minutes before Wall Street opens at our usual time. I'm your host Nikos Zaboura, Senior Market Specialist at FXCM. The US debt ceiling negotiations and Fed talk continue to dominate the news, so we will go over the latest developments and of course their impact on markets. Before However, we begin, as always, please read carefully through the risk warnings and the disclaimers, and then we will get started. Once again, please read carefully the risk warnings and the disclaimers before we begin, and bear in mind that anything discussed in this session does not constitute investment advice and should not be construed as such. Okay, let's get started. We have Euro USD on our screen. Let's go over the latest developments. We also had some PMIs from Europe and from UK that were mostly poor, and they definitely don't do the common currency any favors. But the main news, of course, were around the debt ceiling negotiations and the repricing around the Fed rate path by markets. Let's see what we had on the debt ceiling front. US President Biden and Speaker McCarthy, House Speaker McCarthy, met yesterday, and although they did not reach an agreement, they both spoke of productive meeting, and markets appear to remain optimistic around such a successful outcome in these discussions. But it's clear that there is much posturing there, and the mood seems to be a little bit more confrontational, let's say, at least from what we see on the commentary from politicians. Treasury Secretary, meanwhile, Ms. Yellen, reaffirmed the estimate that the government will not be able to fulfill all of its obligations by early June, but now turned the heat up, speaking of this outcome being highly likely at this stage. Now, on the Fed front, Chair Powell, in a very scripted, I would say, interview, did not offer much new that was on Friday, but kept the door open to a pause. However, we have recently seen hawkish commentary and diverging approaches by some voters. Ms. Logan, for example, who is a voter, warned on Thursday that current data don't support a skip in rate hikes. Yesterday, Mr. Kaskari on CNBC spoke of a close call between a pause and a hike at the upcoming meeting, but stressed the importance of not taking further tightening of the table, while noting that rates may need to exceed 6% in order to bring inflation back to the 2% target. So definitely overall, some notable hawkish commentary there that doesn't bode well for the prospects of a pause, let alone of rate cuts. Sorry. Now, where does this bring us on Euro USD? Now, the debt ceiling talks have worked in favor of the greenback so far, as risk off around it, and last week had helped it because of safe haven status. had helped the greenback, whereas later optimism again worked in its favor because it increased the chances of a soft landing and further tightening by the Fed. Similarly, the latest Fed speak has created a moderation in market expectations for rate cuts. Now this is pushed back to November, the first hike, and the CME's Fed Watch tool now sees is a split between, I would say, just 0.25% and 0.5% cuts as the most likely scenario from 0.75% previously, while also pricing in chances of another hike, small still, but they are there, and this repricing seems to not have ended. The pair is at fundamental and technical crossroads as the ECB is more aggressive, but more rate hikes are priced in there. Now, the common currency has breached key technical levels, the daily Ichimoku cloud and the ascending trend line from the 2022 lows, and the 50% Fibonacci of the March low, April high rise. And of course, it trades well below the black line, which is the EMA 200, the 200 period EMA on this 4-hour chart. As such, immediate bias is on the downside, and there is scope for further correction towards the 200 days exponential moving average at around 1.068. And I could even see further losses towards the 2023 lows at 1.0515, 1.0481. However, sustained weakness in this region doesn't look easy, as the ECB is still expected to deliver more hikes this year. Now, other than that, we can see the pair already tries to stabilize, and we can see a bounce back towards the 200 period EMA at around 1.09. Daily close above it would put bulls back at the driver's seat, but the 2023 highs of 1.1096 look distant. So again, the pair is at crossroads, fundamental and technicals. The longer term uptrend has not been breached yet, but it's clear that the repricing in Fed expectations works in favor of the greenback and hurts the Euro USD. Now let's go to gold. And if there are any opinions or questions around what we discussed, feel free to share them with us by typing your comments on the chat box. Now, the same development that we discussed above have also sent gold lower and has returned back into the Ichimoku cloud today. This creates increased risk for a breach of the lower border at around 1,925, although the move looks a bit stretched, and it may be early to talk about a steeper decline that would challenge the 200 period EMA at around the 200 days EMA at around 1,880. On the other hand, as we get closer to the early June estimated deadline without an agreement on the budget, sentiment could sour again, and that could potentially support gold. Furthermore, the relative strength index you saw it's again down here, it's again oversold territory, and we see a bounce at this stage in the precious metal. We can see an effort to return above the 200 period EMA at around 1,990, but daily closes above it that would post the downside momentum would need a stronger catalyst, and the 2023 highs don't look like, in the record highs actually, sorry, at 2008, it don't look that easy under current conditions. And let's turn now to the Nasdaq 100. Hope for a successful outcome on the budget negotiations here at Wall Street, which looks past the hawkish pricing around the Fed's rate path. And NAS 100 set fresh 2023 highs earlier today. This brings it closer to the 14,302 resistance, but bulls will need fresh impetus for taking it out, and they don't inspire confidence for at this stage at least for further gains that would challenge 14,856. However, the lack of progress, as we said, on the budget negotiations may weigh on sentiment and on the index, while you can see at the bottom of our chart that the relative strength index has diverged lower. It didn't follow National 100 higher, and that's a sign of potential weakness. So we can see further pressure here. It's already negative territory today, but from the 200 period EMA at around 13,230 and below, it appears well protected, and pronounced risk of mood will be required for moves below that. And you can see then that many other roadblocks follow. So that's pretty much it with the technicals. As always, let's now go to what's ahead. There are many economic releases this week, and US preliminary PMIs are due shortly. We already talked about how the UK and EU ones were not good. And Wednesday is probably the busiest day. It starts with the Reserve Bank of New Zealand, which had delivered the hawkish surprise in April with its 50 basis points increase. Did not offer explicit guidance for its next move, but there is definitely room for more tightening, and baseline expectations are for a 0.25% increase. Also in focus will be the updated projections, including the appropriate rate path. I assume that they will likely raise that. The previous one called for a rate for one more hike, essentially, from where we are here, and it looks likely to me that they would raise that. Now, on the same day, UK CPI inflation on Wednesday for April, it was above 10% in March, and it's projected to decelerate significantly in this print. The Bank of England expects a sharp fall starting from this release. In spite of this expectation, however, it actually raised its 2023 and 2024 forecasts. The FOMC minutes are also on Wednesday. The Fed had hinted to a pause at the last meeting, but without taking more hikes off the table. So it will be interesting to see how this is reflected on the accounts of that decision. And also, the last time Fed staff had projected a mild recession. So do they stand by that? Has something changed? There are quite a few things to watch out for there. In the past few accounts have been quite interesting. Of course, central bank speakers from the US and Europe mostly, but also the debt ceiling negotiations will remain in the spotlight. On the earnings front, low-cost airliner Ryanair was in the spotlight yesterday as it returned to annual profit. Its revenues more than doubled, and also expect a strong summer performance, which is something we've seen. The expectation for a strong summer we've seen across other airlines, low cost and not. You can find more information on Ryanair's results on your respective FXCM market analysis website. Now, other than that, Chinese EV maker XPeng and smartphone maker Xiaomi, again from China, report on Wednesday. The US season draws to an end, but we still get some big names such as NVIDIA, which is also due on Wednesday. NVIDIA, of course, a major chip designer that has also tapped into the AI, artificial intelligence market. That's it from me. Thank you for joining me. We will talk again on Thursday at our usual time, 10 minutes before Wall Street opens. Thank you. Bye.